Hi, this is Carlos Garcia in Washington, D.C. Welcome to our real estate blog, Eng Garcia Properties real estate blog here in D.C. We serve clients in D.C., Maryland, and Virginia. We sell about 12 properties a month. We're very, very active realtors, and today I want to talk about the power of interest rates, in particular, low interest rates, today's low interest rates for the casual real estate investor. So perhaps you are not some massive real estate investment trust, but rather a working person who has a little bit of extra income and is looking to invest it potentially. Well, slow and steady wins the race. Washington, D.C. is a wonderful place in which to invest in real estate, to buy and hold, which will accumulate equity and which will build value and long-term growth in your net worth for you slowly and steadily. However, over time, quite remarkably, and especially if you get in now and get one of these 3 or 4% investor rates. Recently, I've been able to refinance some of my existing properties. I also acquired a property earlier this year in an up-and-coming DC area. Group rental houses are really, really easy to pull off. There's a great, great demand for rental housing among, in particular, it turns out, young professionals who will group together to live in a nicely renovated home in an up-and-coming neighborhood. Well, listen to this. When you do an investment of that sort, you may, in fact, bring in more rent than you do have payments, fixed costs on a monthly basis. But that profit, if you will, isn't the key. The key is to accumulate equity in that property slowly and steadily over time by having those tenants, those lovely tenants, pay down your mortgage for you effectively. And there's no better time than right now to do so. Right now, about a third of your mortgage payment goes to principal, if you can imagine that. In the mid-90s, it was less than 10%. Furthermore, your total mortgage payment these days is just about 70% of what it was back then. So in absolute terms, your payments to principal are much higher, and on a percentage basis, they are blowing out of the water what in historic terms would have been a pretty decent and normal, if you will, rate of, say, 7, 8, 9%. Well, today with your 3 and 4% 30-year fixed rates for investors, you're able to stuff that property with equity at a much higher rate. And of course, the idea is that you're not doing it, but effectively your tenants are, because they're paying you so that you can pay your mortgage and maybe even keep a little bit on the side. As a casual investor, which I am, I'm not looking to earn my living via my rental income. Rather, I earn my living as a real estate professional, and on the side, I slowly and steadily accumulate wealth through my real estate holdings. And right now, the rate at which I'm doing that has really been accelerated via these wonderful 30-year fixed products, not to mention what you can do with a 15-year fixed mortgage, which will have an even lower rate, perhaps in the 2 or 3% range. Give us a call if you want to talk more about this. We're Eng Garcia Properties, here serving clients in D.C., Maryland, and Virginia. Thanks so much for joining our real estate blog. We look forward to hearing from you soon.